Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our view on the gold market. So actually we put a major foundation for our strategy on this week in the weekly report. It stands around the grubber that has been formed on the weekly chart recently. So we talked about this in the weekly report right there. You can see we have the bullish grubber on last week. And in fact, until these lows are valid, the market ends above them. So on the daily chart, this is right there. Potentially this might be the bullish context that lead market above this top. So return back to actually area around $2,100 per ounce. So, but the major question is, well, market has significant bearish on way to the upside. And we have a really big bulk of data later in this week. So European Central Bank meeting maybe will not make a significant impact on the gold, but gross domestic product, personal consumption expenditures, and some comments from the Fed on the next week, which really could bring some volatility and let markets and help market to set the direction. And currently this is some really tricky game. Who will take the lead? Either the bears will hold the control and push price lower in the gold market, or bulls will take the domination and push price higher. In general, fundamental background stands more in favor of the upside action. But market right now, from the technical point of view, hasn't made the final decision on the direction. Because on the 4-time frame chart, take a look. We have said that 2040 area will be the vital area for the bears. Just because when the bearish market shows the downside action, especially in the way of the ABCD pattern, and when it shows significant acceleration on the CD leg, it should not show very deep retracements, and actually retracement that brings back price to the C point. This is of course will be a bit curious. So normally bearish market, well, could show the pullback and even could try to touch the confluence, but obviously it should not break it up. And currently market stands at this vital area, right at this confluence resistance level. But at the same time, this is some kind of the chance. If you would like to take the short position, this area doesn't guarantee you success, but it provides you best risk-reward ratio. As I call it, is a culmination point. This is culmination point for the bears, because you could place stop just above the confluence and see what will happen. If market will able to hold the bearish context, price probably starts dropping and you will get the perfect entry point. If not, and market will keep going higher, your loss will be minimum. So from that standpoint, this is interesting area to consider and think about it. Maybe do not use the common trading lot, maybe just cut it, use the 40% of the normal trading lot that you're usually using. But it's definitely worth of some attention, and you could think about it, because if we take a look at the other markets, as I already talked about in today's euro currency video, here we do not have any signs of the breaking of the bullish tendency on the dollar. This is dollar index. You can see what's going on. Markets are forming flag, doesn't show any bearish signs, so it's moving higher here. Everything stands great with the bullish context. On the 10-year yield, we also do not see a really significant pullback. Everything also stands on the way higher to the high yields, which is also supportive for the dollar. That's why from that standpoint, despite market has stuck around this area, well, chance exists that maybe downside action might be continued. So despite that, we have the bullish grubber on the weekly chart. So that's what about this area. At the same time, bulls have the same area on lower time frame on the hourly chart. Recall what we discussed in our weekly report. We said here, take a look, it might be ABCD retracement down, and we have to keep an eye on what will happen around 618 support area. If market will not break it down immediately, then the bulls have more chance to succeed in breaking its bearish context, right? So that was great area for potential taking the long positions, some kind of the same culmination point, but for the bulls. Currently at this point, if you haven't taken position right there, so then this ABCD has been completed, it would be better to not take it right now. Wait either for upward continuation, the breaking of the confidence, and in this case we will consider another chance for taking the long position, or if bears will take the domination, this bullish context will be broken and the market just keep going lower. From that standpoint, taking position right now when the market stands in the confidence resistance is not a very good idea. So as a bottom line, if you have the bearish view and you saw a chance for possible taking, or at least trying to take the short position, this is the best area that you could choose. Although, as you understand, the risk still remains here, and it doesn't provide you guarantee that you will succeed. It's just minimize your potential loss if you will take position here. For the bulls, if you have missed entry here, then currently it would be better to not take the new position and wait for clarity. If we will get the confirmation of the bullish ambitions of the market, that market starts going together with the grabber pattern on the weekly chart, breaking this area above, breaking this area to the upside. In this case, we consider other levels where we could take the new long position here. So let's see what will happen.